GST law. To my mind, this remains an anomaly. This remains an anomaly. Now look at this position. If the government wants to bring in petroleum products into the statute book, then entry 92 capital A must go. Now, is there something more legal to it than a mere slip up? I think the lawyers there would perhaps spend some time on this amendment. Article 279 capital A was inserted relating to the formation of the GST Council. I did not want a GST law with a GST Council which has no teeth. Please note, it is only a recommendatory body and its decisions are not binding. That is the reason why many of the recommendations of the GST Council don't find a place in GST law. They don't find. So GST Council recommends something, circular is something else, notification is something else. GST Council's recommendation is not even taken as food for thought by the union and the states. The only saving grace that I'm seeing, as you see in my PPT bullet point 4, is that it can settle the disputes between union and the states. The constitutional amendment, 101st constitutional amendment, provides for taxation on entertainment and amusements. Of course, they said that if such a law existed and the tax could be levied by panchayat, municipality at all, and all that. Kindly go back in memory about a year and a half back. Those of you who followed Chennai or Tamil Nadu chose to levy entertainment tax. Please be careful. Tamil Nadu chose to levy entertainment tax on PVRs and Inoxes. PVRs on all these screens which are available in the shopping malls. Vijay, is it okay now?
Yeah. So just one request. If you see on the left hand side down, there you will see a item start video or stop video. So just click on that.
I must click on that. 1 minute.
The start video.
Vijay, I don't see any icon, Vijay.
Okay. Sure. Yeah.
Because to my mind, I'm sharing.
No, you are sharing. If you see at the left hand.
What you are looking for? What we are looking for?
Just at the bottom of the screen, left hand. You see mute or start video. Okay, forget it. Continue.
It's a mic icon. It's a mic icon.
It's a mic icon.
Next to it, it's the video icon. Cross.
Yeah.
So just click on that. You will start. You will be visible. That's it.
No, I am fine.
Okay.
So
presentation is visible. Please continue.
Visible. Those of you who followed Chennai, you would see that entertainment tax was proposed between 30 to 60% on tickets. This is the problem. So 101st constitutional amendment provides for taxes on entertainment and amusements to the extent it was levied and collected by panchayat, etc. There are many states in India where in respect of most of these, including exhibitions, etc., where these taxes were permitted to be collected. So that option is open to the government. It provided for payment of compensation to the states on account of revenue loss. Now, there is one bullet point here that I have not brought in. If you look at the objects and reasons, the proposed 101st constitutional amendment bill provided for levy of an additional tax on supply of goods. Please be careful. It provided for levy of additional tax on supply of goods not exceeding 1%. Not exceeding 1% in the course of interstate trade or commerce to be collected by the government of India and passed on to the states. I will caution you here. The government is now mulling post-COVID to introduce this 1% tax, additional tax on interstate supply of goods. Please be careful. It is only interstate supply of goods. The union government will collect this and pass it on to the states. So this 1% levy is an open option. However, this 1% option is available only for a period of 2 years. Now, those of you who are lawyers or advocates or counsels, please think whether this 1% should have been introduced on 1st of July 2017 itself. And was this constitutional amendment meant to collect this 1% immediately on introduction of GST? Or is it possible for the government to say that, listen, I didn't introduce it then, I will introduce it now? Is it possible for it to introduce? And the second question that arises is whether this 1% additional levy should be for a continuous period of 2 years, or can it be for 6 months now, leave an option for 1.5 years later, when one more pandemic or crisis comes equivalent of COVID, they would want to introduce later. Now, this is a question we need to answer. But seriously, the government is thinking of levying this additional tax of 1%. Please be careful. During floods, Kerala introduced a cess. Cess was within their powers. Please be careful. So they can introduce this 1% additional levy, which is perfectly in line with law. Now let's get to this phrase, levy and collection. Article 265, those of you who are lawyers again will know, Article 265 says, no tax shall be levied. Please look at the first bullet point there. Article 265, I am reading from the Constitution. No tax shall be levied or collected. It is or collected, except by the authority of law. So the Constitution says levy or collection, levied or collected except by the authority of law. Can you say that this 1% is going to be by the authority of law? The answer is yes, because the Constitutional Amendment Act provides for it. So they levy, collect, pass it over to do whatever they want. Law means statute. They will have to bring in or amend this statute for the purpose of this additional tax, which they will do. Authority of law means procedure for imposition. This procedure is already stipulated in the Constitutional Amendment Act to provide for levy of an additional 1% on interstate supply of goods. So the second point is also answered. The government is well within its powers. Then it must come through legislature. That means they will amend CGST, they will amend IGST. States will follow by amending their own local laws. Therefore, the legislature has the wide latitude to classify objects, person, things, and tax. All four for this additional tax is available. Now, you can call it by whatever name. You can call it additional tax. You can call it COVID tax. You can call it COVID cess. You can call it by whatever name. The moment this is brought in, it is well within the ambit of the Constitution. I am again going back to the first bullet point on this slide. The article or the Constitution, Article 265, uses the phrase levied or collected. Please be careful. It is levy or collection. I'm coming back on this 1 minute later. Therefore, a charging section, if you look at section 9 of the Goods and Service Tax Law, which we call as the charging section, it must fulfill certain ingredients. It says, subject to the provisions of dash whatever, the government can levy tax on the value determined as may be notified. It says levied and collected. Section 9 uses the phrase levied and collected, but the Constitution uses the phrase levy or collection. Now this is where I have a problem. Can levied and collected be different from levy or collection? Article 265 uses levy or collection. Section 9 uses levy and collection. Now, if you look at Article 265, why does it use the word or? Because collection is a machinery provision. Collection is just a machinery provision. The relevant sections in the statute can take care of this collection. But levy must satisfy certain requirements under law. Therefore, levy or collected is used in Article 265. Section 9 uses levy and collection. Do we have a good challenge here. Is the section doing more than what the Constitution provides for? Constitution uses the word "or," section uses the word "and." Now, it is perfectly possible for some senior counsels there to argue, so what, levy or collection, levy and collection, इसमें क्या फर्क है? फर्क कुछ लगता है क्या? फर्क आता है क्या? Can there be a distinction when you apply this to a real-time supply transaction? Can there be a problem at all? I will keep giving you some examples where I think levy or collection is different from levy and collection. Now, if you look at the interpretation of statutes and deeds, many senior counsels and chartered accountants there can turn around and tell you shall must be construed as may, and can be construed as are, may can be read as shall. Now, these are provisions in the statute which are to be interpreted absolutely strictly. All of you on this webinar will agree with me that the levy provision, levy, must be interpreted absolutely strictly. There can be absolutely strictly. There is no scope for interpreting, adding or subtracting anything more or less from the levy provisions. Every single word, every single punctuation, every single comma full stop in the levy section must be read and understood as the legislature intended it to be understood. Therefore, when the Constitution says levy or collection, can the legislature say levy and collection? Now I will give you an example. I can say Vijay and Girish must come to my house if they want this PPT. I can also say Vijay or Girish can call me on phone. Both are completely different. If I say Vijay and Girish, there is no option. Both of them have to come here. If they don't come, they don't get. If I say Vijay or Girish, one of them can come and collect. Therefore, levy or collection, to my mind, is different from levy and collection. Now, this issue, we had brought it up to the GST Council right at that time. Section 9 itself was framed and the draft model GST law came into the statute book. Please go to the draft or model GST law. There it was R. Subsequently, they changed it to and. Now, when this was bought, the government said or is disjunctive and is conjunctive. So they said or and can be interchanged however you want in the context of levy provisions. Absolutely no difficulty. For one moment, let me say that the government is right. Or can be interchanged with and. Let us assume that the government is right. But if you look at the interpretation of statutes and deeds, where I consider GP Singh to be an authority, those of you who have GP Singh, please look at 13th or 14th edition. In fact, in the next bullet point, I've also told you on which page number. There he has said, while or is disjunctive and is conjunctive, you have to be very careful when you use it in the levy provisions. In some other provision, you may read it differently. Therefore, I brought in one other provision where we have difficulty. Please look at section 17, subsection 5, clause C and clause D. Section 17, subsection 5, clause C is blocked credit. Blocked credit. Section 17 is blocked credit. Section 17, subsection 5, clause C says, works contract services when supplied for construction of an immovable property other than, in bracket, plant and machinery. In 17(5)(c), it says plant and machinery, it will be restricted. In 17(5)(d), it says goods or services are both received by a taxable person for construction of an immovable property other than plant or machinery. Can it be? In 17(5)(c), you are using and. In 17(5)(d), you are using or. Now, let me again tell you, let me again confess or concede that yes, even here the government is right. and are intentional. The government intentionally has used the word and in 17(5)(c) and are in 17(5)(d). No difficulty, no difficulty. The legislature's power is supreme. They can do whatever they want. But when you come to explanation to section 17 subsection 6, where they are defining plant machinery, they have said for the purpose of this chapter, for the purpose of this chapter, which is chapter 2, they say plant and machinery. They are not saying plant or machinery. Therefore, councils, chartered accountants, please be careful. When plant and machinery is defined in an explanation, then it must apply only to 17(5)(c), because 17(5)(d) uses the word or, plant or machinery. Plant or machinery is not defined. Therefore, when a builder constructs his own building on his own account, plant or machinery credit must become available. Credit must become available. Now, there are several advance rulings, including the Safari Retreats case, where this issue of and or was not taken up. It was not before. Without this itself, we have succeeded. Without this, we have succeeded. Imagine if this were to be the situation and we try and distinguish and or are, I think we have a wonderful case. Now, what will the government do? The government may bring in a retrospective amendment, because section 9 provides for retrospectivity. Now, it is a settled position of law that when a levy emerges by virtue of a retrospective amendment, it can only be prospective and it cannot be retrospective. Now, the government is fully aware of this situation. So I thought, let me spend a couple of minutes trying to figure out what the Constitution says and how these people have used the word and or are. Now, when you look at 3/2019, the notification which came in respect of real estate transactions, there are several places where they have used and or are. Now, we have to be extremely careful when we deal with those situations. Every word in a statute must be given its due interpretation. Therefore, I am saying usage of the word and in section 9, while the Constitution allows you only are, to my mind, the legislature has traveled beyond the permission of the Constitution. Therefore, we have a good challenge. Lawyers can, councils can consider moving the court based on this issue. You can also look at GP Singh for an excellent discussion on this transaction. So there are two issues that come out of Constitution. One, levy of additional tax. Levy of additional tax, where the Constitution provides, please, those of you, you can look at the Bill 6. In fact, the objects and reasons itself says that you can provide for an additional tax for a period not exceeding 2 years. So they can bring it in the levy provision. This is one, perfectly possible. The second one that they can do is levy or has become levy and. So we will have to be careful and try and find out whether we have a good case in terms of the challenge itself. I think some of the senior learned counsels there can spend some time looking at this. Now, what is the difference between levy, charge, collection, recovery? What is levy, charge, collection, recovery? Excise duty under the erstwhile excise laws, under section 4 of the Central Excise and Salt Act 1944, was a charge. Now, what is the distinction between a charge and a levy? A charge is on an activity. A levy is on an event. Please be careful. Charge is on an activity. Levy is on an event. What is charge on an activity? Charge was on manufacture. Levy is on supply. Charge attaches itself like an albatross to the activity. That means the moment there is manufacture, there is a charge. Without payment of that charge, you cannot move the goods. That is why those of you who were in excise practice, in RG 23 Part A, earlier days, in personal ledger account, the government insisted that you keep the money. If you don't have the money, deposit the money and then move the goods. But for the purpose of levy, it is on an event, right? Occurrence of an event is occurrence of supply. Therefore, The event occurs earlier while the collection happens later. Levy is on an event, collection can be deferred at any point to anybody because tax is an artificial exaction. Please be careful, it is not extraction, it is exaction. Now, what is artificial exaction? Now, the tax under the GST law is a machinery provision. You can choose to collect. You may choose not to collect. If you don't collect, the law says that the rupees 100 that you have charged is deemed to include the tax. That is why you have Rule 35. Rule 35 says if you sell it for rupees 100, then you have to do 18 by 118 to arrive at the tax component, reflect the tax component in an invoice under Rule 46. If you don't, then the recipient does not get the input tax credit. This is one of the conditions relating to the invoices. Please be careful. Therefore, while tax is an artificial exaction, there is no quid pro quo in return. There is no need that the customer has to pay you. He can pay you only 82 rupees. He need not pay you 100, but money goes out of your pocket. Therefore, levy refers to an imposition of tax only when all the ingredients of tax are found to be present. Now, what are the ingredients of tax that are to be present? We will look at it in the next slide. Levy also refers to an assessment. An assessment leads to a demand. Therefore, the moment you use the word levy in a charging section, it includes assessment, demand, rate, and collection, apart from valuation. Whereas recovery refers to collection. First, there must be a demand, only then there can be a collection. Therefore, when they use the phrase levy and collection under section 9, there is a problem. It can be levy or collection only. Consider reverse charge mechanism, where the recipient is required to pay tax. Can you collect it from the person who is required to pay you? Because he is the supplier of service or he is the supplier of goods. Therefore, he is required to charge the tax. Therefore, can you pay higher than what he is required to pay? If your supply from an unregistered person is for rupees 100, can you say it is 82 plus 18? In my opinion, no. In my opinion, no, because it is levy and collection. When there is a levy, you can collect. The levy in this case is on the recipient. Therefore, in my view, he cannot collect the tax in respect of unregistered person transactions. Please be careful. Pay some attention to it. You can have a different view on it. Now, the moment you say levy, Govind sir and Ganga Saran's case comes into picture. Govind sir and Ganga Saran's case is where the Honorable Supreme Court laid down the law relating to taxation. It said any taxation must have 4 pillars. It must have 4 pillars. First is the levy or the imposition, which will describe the taxable event. For example, under income tax law, there must be capital gains to levy capital gains tax or levy income tax. So under GST law, there must be a taxable event, and that taxable event must be a supply. That taxable event must be a supply. Consider reverse charge case. There is no supply in the recipient's hands. They are shifting. Therefore, levy or collection, to my mind, makes sense. Levy and collection will become difficult. Levy or collection means tax on 100. Levy and collection means 82 and 18. Please be very careful when you are dealing with these provisions. So condition number 1, levy means an imposition. 2, levy must be on a person on whom the levy is imposed and who is obliged to pay the tax. Consider reverse charge, where the levy is normally on the supplier, but the recipient is deemed to be a supplier in this case. If he is deemed to be a supplier in this case, Rule 35 must apply. Then I can do 18 by 118 in case of 100. Please be careful. It is perfectly possible to take that position. The imposition which describes 1, the taxable event, the person, 3 is the rate at which tax is to be imposed, and the 4th, the measure or the valuation. Because section 9 says tax shall be paid at a rate not exceeding 20% under this act. or 40% under the IGST Act as may be notified on the value determined. If you say value determined, then you have to go back to section 15 to find out. So in respect of the levy, while all the provisions or ingredients are present under section 9, the issue is whether it is levy and collection or levy or collection. The Honorable Supreme Court in many cases has said, any uncertainty or vagueness in the legislative scheme of defining the levy does not sustain itself. Now in this backdrop, consider one or two examples. Can there be a levy in respect of an exchange transaction? What is a transaction of exchange? You take old gold to Zaveri Bazaar, exchange it with Tribhuvan Das Bhimji Zaveri, TB who is in Mumbai, exchange it for new gold. You give 9 grams, you take 9 grams. Is it a transaction of an exchange or is it a transaction of barter? Please be careful. There is a very, very subtle difference between exchange and barter. I will come to this example at the fag end of my presentation. In fact, I have taken this very example. Consider a second case. Vijay will go to one consumer durable shop which says, before April 14th, return your old washing machine of any make, buy a new one for 22,000. He doesn't say you have to give me Godrej make. He doesn't say you have to give me Bosch make. He says, give me your old washing machine, take the new Bosch machine at 22,000. That's all he says. It doesn't fix a value. Then can it be said that in this exchange transaction, valuation mechanism fails? Can you say? Because Vijay may be thinking his old washing machine is 5,000. Somebody else will say 200 rupees. Somebody else will say keep it on the footpath. It is of no use. Keep it and get out. Now, in all of these cases, when valuation fails, tax fails. We will have to reconsider these transactions under the GST law. When I come to the examples, I will deal with that separately. Levy. What does it mean? And what does it include? This simple 4-letter word actually harasses the entire tax professionals. Levy means to impose, assess or collect. The legislative power. Levy is a legislative power. Assessment is a quasi-judicial power. Therefore, an official has to determine the liability of a particular person. Now, if you see, they assess you, determine, stop your vehicle at the checkpost, collect tax. Is it possible? No, it is not possible. No, it is not possible. There has to be a demand that is determined under 73, 74, 129 or 130. Without that order, there can be no levy, no collection. That is why the law uses levy and collection here. Unless there is a levy, there can be no collection because they have used levy and collection. If it is levy or collection, levy would suffice to collect the tax. Collect is an executive function. It is an executive function, which means any inspector, any clerk can collect. It is not necessary for a supplier to be imposed with a tax. Recipient can also be made a person liable to tax. Now, the legislature can impose a tax on the recipient. Legislature can impose a tax on the recipient. That is why you have reverse charge under 93, 94, 95. Now, legislature is imposing a tax on the recipient or any other person. Any other person. The levy can say, provisions can say, Girish Rathi will supply the goods, but Vijay Keval Ramani will pay the tax. Perfectly possible. Perfectly possible. It is within the 4 corners of law. Now, where is the law coming here? Which is that example that I can give you where this provision is perfectly permissible? Now we have Zoom. Now we have Zoom, where we have all logged into. Is this man paying tax? Is Zoom an Indian entity? Is this entity registered in Mumbai? Is it registered in China? Is it registered in US? Where is it registered? Where is the supply of service taking place? Who is that person who is paying tax here? Can it be online information database access and retrieval systems? Therefore, is Zoom required to appoint Vijay Keval Ramani as a representative assessee for the purpose of payment of tax? Is it possible? We have to consider. Now consider Vijay to open a Zoom account. Today it may be free. Tomorrow he will charge you money. If he charges money, to whom is he paying this money? Is he paying it for the purpose of import of service? Is he paying it for the purpose of a supply of service? Is he paying it to an Indian entity? Is it going somewhere else? Now, all of us use Google. All of us use WhatsApp. All of us use Quora. All of these hire space. They hire space. They hire bandwidth. They hire frequency. They let out advertisements. Who is this representative assessee who is paying tax is something which I want to know under law. If somebody is not paying, then he is required to pay tax under the goods and service tax law. Therefore, levy has a constitutional sanction, while collection is the locale where statute declares it to be. In respect of OIDR, section 13 subsection 12 of the IGST law, read with section 13 subsection 14 of the IGST law, declares that the taxable person in respect of Zoom, Google, WhatsApp, Quora, whoever this man is, that you must appoint a representative assessee in India, and that representative assessee must remit tax. I don't know if we are remitting. We will need to see and how the government moves on these transactions. So a simple phrase, levy and collection, has so many intricacies. There are many, many examples, but I will choose to stop this here. What are the implications of section 9? Section 9 is what we call as the charging section, and it levies tax on intrastate supplies. I'm talking CGST. You have 5 where it levies tax on interstate supplies, notified rate not exceeding 20%, to be collected in the manner prescribed. Collected in the manner prescribed. Please be careful. Collected in the manner prescribed. Prescription for collection comes in respect of 2 classes of transaction. Those of you who are familiar with lottery, there he has said you have to do 28 by 100 and not 28 by 128. Law says I want tax on full 100 rupees. Law doesn't say tax on 72 rupees you pay 28. Law says 100 rupees is your ticket price. On ticket you pay 28 rupees. Therefore, law prescribes what you will have to do. Certain notified categories of supplies, goods and or services, tax is payable on reverse charge basis. Please consider, when an advocate, there is no bias in taking this profession. This is just an example where I want to tell you how this tax works. An advocate charges 1 lakh fee. A chartered accountant also charges 1 lakh fee. A chartered accountant pays 18% tax, CGST, SGST or IGST. So it is 1 lakh plus 18, 118. How much will you pay tax on advocate services? Is it going to be 100 you pay him, 18 by 118, therefore it is 74, I'm sorry, 84 and 16, because it comes to that percentage, 84 and 16, it's not 16%, or 82 and 18, or is it 100 plus 18? What would you want to do? Rule 35, read with levy and collection. If I were in your place, I would say that 100 includes tax, therefore it is only 74. But look at the consequence of this. The advocate will be declaring 100 rupees as his income in his P&L account. Advocate will be declaring 100 rupees as professional income inclusive of tax. But therefore, can you show that as exclusive of tax? Please be careful. Consider this provision. If I want to take input tax credit, I can do 82 and 18 or 100 plus 18. I am doing 82 and 18. Requesting the lawyer also to declare only 82 because in my GSTR 1, I would have uploaded 82 and 18. You can look at that provision. It is workable option. Certain notified class of registered persons, tax on reverse charge mechanism, goods and or supply. rent-a-cab services, rent-a-cab services with driver, without driver, with fuel, without fuel. It can be anywhere, anyhow. By recipient, when received from unregistered supplier. Similarly, for security services, for courier agents, for all of these people, please look at these taxation aspects. Levy makes a lot of difference in these cases. OIDR, I discussed, so I wouldn't want to look at it. Therefore, if I have to summarize this levy with the 4 pillars, you have to fit into this tabular column. If one of the columns says no, then there can be no levy. I will give you one example of where there is no levy. First, look at column number 1. Supply. Is there a supply? The answer is yes. Is there a value? The answer is yes. Is there a rate? The answer is yes. Is there a taxable person? The answer is yes. Then is there a charge or a levy? The answer is yes. So all 4 must be yes for a levy to exist. Now consider the URD supply of gold, which we said exchange. In gold, Vijay will argue with me saying, take the RBI rate or the bank rate or the closure date, then you will get the value. Now I will just tweak this example, just see how it works. In the case of old gold, is there a supply? The answer is yes. Is there a value? I want to say no. I want to say no. Then Vijay will tell me, take the rate as RBI stipulated. Then it becomes yes, tax applies. In the case of the washing machine example that I gave you, is there a value for the old washing machine? No. Valuation mechanism fails in that case. There can be no supply. There can be no supply. Then what I will do, I will take reasonable means of estimation under Rule 31. Is it possible? No, it is not possible. You cannot take that rule. Therefore, to my mind, the government has failed to bring in a charging provision in respect of these transactions. It is a good case to litigate. Please consider this. Please consider this transaction. Unless you fill in all as yes, there can be no levy at all in these transactions. Now, GST is a dual tax, CGST and SGST. This mechanism itself was thought of by Rajiv Ranjan. Therefore, GST is a dual tax where the taxable event, it occurs under both the provisions, under CGST and SGST at a given point in time. At a given point in time. Same day, same time, same nanosecond. It triggers both CGST and SGST. The taxable event comprises of a supply. If there is no supply, there is no levy. Alcoholic liquor is kept outside the provisions of goods and service tax law. Consider this case. My good friend Bharat, who is there, or Girish, or Jamna Madam, Jamna Shukla, whom I saw at the beginning. Let us say they run a restaurant. Let us say they run a restaurant. And they supply mocktail. They supply mocktail or cocktail. If I say cocktail, Vijay, Girish, all of them will jump at me and say, no, it is liquor, no levy. I will say mocktail. Mocktail also had some vodka in it. It has some whiskey in it. Will it become liquor? Will it become liquor? Or do you want to pay tax at the rate of earlier 28 and now 18 as fresh fruit juice or aerated drinks and be done with your tax? Be done with your tax. Please be careful. Whether it is taxable or non-taxable is determined based on the nature of supply. Is this alcoholic or non-alcoholic? What did you do under old law? What did you do under old law? Under old law, did you classify it as juice? Did you classify it as mocktail and pay tax at the highest rate under VAT law? Or did you pay tax as if it was liquor and applied the liquor rate? Please be careful. Tomorrow, liquor can come in to the GST net at 40% levy. You will get stuck at that rate. Please classify yourself properly today. Goods or services are both payable by taxable person. There are 5 petroleum products which are outside the ambit of the goods and service tax law. Now, there are 8 forms of supply. Supply, I don't have time to deal with it. I will deal with the latter part of this definition, made or agreed to be made for a consideration. Now look at this consideration. Section 2, subsection 31 deals with consideration as any payment made or to be made. Therefore, paid or promised. It goes back to the contract law. Payment made or to be made in money or otherwise. Therefore, it can be in kind. Please keep it in mind that it can also be in kind. The important aspect that I'm trying to say here is in money or otherwise. I will take this example in the last but one slide and show you how the levy is going to impact monetary act of forbearance, etc. I don't want to spend time, all of you know. The levy is on business. It is on business. If there is no business, there is no levy. Usually, levy means trade, commerce, manufacture, profession, vocation. Trade, commerce, manufacture, profession, or vocation. Consider this case. Consider this case. Assume Girish Rathi or Bharat Sachdev to be one artist. One artist. I commission the services of Bharat Sachdev or Girish Rathi to make a portrait or an impression or a drawing of S Venkataramani, and they charge me 25 lakh for this portrait. I'm keeping it higher than 20 lakhs. Can there be a levy? Can there be a levy? Be careful. He is an artist also, but he is also a chartered accountant. Is there trade? Is there commerce? Is there manufacture? Is it profession? Is it vocation? It says any activity incidental to the above. Therefore, can Bharat Sachdev or Girish Rathi take a position saying that my profession is chartered accountancy, but I am also drawing or I am an artist. Therefore, this 25 lakh is not in the course of business. Take it as other income. Don't pay tax. Is it possible? Please consider. Please consider it. It may be possible. There are a lot of people deriving other income, which is not directly linked to the trade, commerce, manufacture, profession, or vocation. Now, this example can be better explained by the example that I'm going to give you. Those of you in Mumbai will know that there are hundreds of factories running factory buses. Please be careful. Hundreds of factories. Infosys, Godrej, Tata, whoever, Larsen & Toubro, all of these companies run buses for their employees. Now, this is an option. This is an option. No company imposes mandatorily that Vijay should use L&T bus and pay 3,000. No. He says, you want to come by car, you come. You want to come by train, you come. You want to come by Mofsil transport, you come. However you want, you come. But if you use my bus, 3,000 rupees per month is what I will deduct. And this deduction, permission to deduct, is given by Vijay. Please be careful. He will say 3,000 you deduct from my salary. Now there are two classes of deduction. Deduction on account of provident fund, deduction on account of conveyance for the bus. Two. There is one deduction which is mandatory, another deduction which is not mandatory. Now can you say Larsen & Toubro, which has hired buses, also supplies service of transportation to Vijay? Can you say? Can you say? And is it incidental to trade, commerce, manufacture? What is incidental or an activity incidental to trade, commerce, manufacture? A byproduct, a waste product, a scrap is incidental to trade or manufacture. But can you say running of a bus and collection of rupees 3,000 from Vijay Keval Ramani is an incident which is an activity which is incidental to trade, commerce, or manufacture? In my view, no. I am willing to fight this case. We should be looking at some kind of a litigation on this issue. Now, the moment I say transportation, Girish and Bharat will not keep quiet, or Jamna Shukla madam will not keep quiet. She will say, Venkat, it is all right for transportation. What will happen to canteen? Now, canteen, there is a mandate that if you are 100 plus or 200 plus, and if you are running a manufacturing facility, then you need to have a canteen, creche, hospital, etc., etc. Not the same case for transportation, except in case of transportation for women employees who travel beyond 10 p.m. in respect of buses in general shift. There is no provision under any law. Please look at those provisions and then revert back to me. Now, in respect of canteen, the Honorable Supreme Court in Hukmichan's case said, the Honorable Supreme Court, the facility of canteen must be made available. If you deduct from salary, then it is a sale liable to tax. Sale liable to tax. But if the law mandates that you have to provide free supply of food, then there will be no liability to tax at all. Therefore, even in respect of canteen services, please see if you have got some scope for litigation at all. Even if there is no volume, frequency, continuity, regularity, etc. Unusual activities included in business, provision of facility by club or association to its own members. The Calcutta Club decision came by the Honorable Supreme Court. Please relook at whether the same extends to GST law. I am trying to fight a case by saying that the law relating to concept of mutuality laid down in the Calcutta Club's case equally applies even in respect of GST law. Now, this admission to a premises, I have a problem here. Now, a tax under GST law is applicable when there is trade, commerce, manufacture, profession, vocation, including admission to any premises, etc., etc., in the nature of trade, commerce, manufacture. It must be in the nature of trade, commerce, manufacture, profession, the nature of trade, commerce, manufacture, profession, vocation, adventure, etc. I can fully understand that entry fee for Appugar in Delhi is a subject matter of levy. No difficulty at all. I can understand. It is amusement, it is entertainment. Admission to PVK Inox, yes, liable to tax. But can you say that admission to Gandhi Museum in Delhi or Mumbai is a subject matter of tax? Is it trade? Is it commerce? Is it manufacture? Is it profession? Is it vocation? Consider Science City in Kolkata. Is it trade, commerce, manufacture, amusement, entertainment, profession, vocation, admission? To my mind, no. To my mind, no. It is not in the nature of trade. Therefore, can you levy tax on those admissions? Please consider. I think we have a reasonably good case to fight. Service by holding office accepted in the course of business. This is the latest judgment of that Madhya Pradesh or Rajasthan High Court, that managerial remuneration is a subject matter of tax. I think somebody has lost their sense of balance. They are unable to understand the relationship between the terms of employment, the provisions of the Companies Act 1956, and therefore they are levying tax here. A managerial remuneration is subject to PF, subject to ESI, subject to being declared as salary in the income tax law. Therefore, and it is a remuneration under the Companies Act 2013. To my mind, there can never be a levy in respect of those transactions. Please look at Chidambaram Pillai's case, 119 ITR. The Honorable Supreme Court has made it absolutely clear there that anything drawn from any entity in the business where either a partner or director is fully engaged in the carrying on of that business, it is salary or remuneration and it is none else. Please look at Chidambaram Pillai's case. I think it is settled there. Race club activities and government activities, I don't have time. I will deal with that later. Person liable. Who is this person who is liable to tax? A person who is liable to tax is a person on whom tax under forward charge is applicable. A person who is liable to tax in the case of a reverse charge is the recipient of tax. Now, this unregistered supplier, I have always had a problem with this man. This unregistered supplier called 94 always creates trouble in my mind. Who is this man who is an unregistered supplier? Is he a person liable to register? Not registered. Please be careful. Liable to register? Not registered. A person who is required to register but not registered. Please be careful. Liable to register and required to register are two different things. Liable to register is where the act casts an obligation. Required to register is something different. One is reverse charge. There is a mandate. Casual taxable person. There is a mandate. In respect of other classes, less than 20 voluntary, more than 20 mandatory. Therefore, person required to register, liable to register, unregistered. I am 50 lakhs, but I'm not registered. Do whatever you want to do. You want to do business, do. Otherwise, forget it. An unregistered supplier. Now, all of these cases, we have to deal with it very, very carefully when we apply the goods and service tax law. Services affected through e-commerce operator, I don't have time. Right to collect reimbursement of tax from customers is not a statutory right, but it is a contractual remedy. Law does not provide because it's a machinery provision. You want to collect, you collect. Don't want to collect, forget it. You want to collect lower rate, up to you. Want to collect higher rate, it will be forfeited under 79. Please look at all of these provisions. Levy of goods, services, forward charge, no difficulty. Wholly goods, wholly services or goods and services, where supply of goods is both goods and where supply of both goods and services is classifiable under Schedule 2. There must be a supply. Then Schedule 2 will tell you what is goods and what is service. Supply involves multiple goods or services, does not matter. Then you have to look at composite supply and mixed supply. Now I have two major issues in respect of composite supply. Composite supply. Consider hotel services. Hotel services. Is it composite supply or mixed supply? Now I will give you two examples. Please take a position. Suppose Girish Rati says, I want to come to Taj Lands End in Mumbai for dinner. Therefore, I also need cab services. Now it is a composite supply. One is for food. The other is for renting of cabs. Now in this composite supply, you have to determine the principal supply made by a taxable person. Composite supply means supply made by a taxable person consisting of two or more taxable supplies. One is rent-a-cab services or cab supplies. The second one is food, which are naturally bundled. In Girish Rati's case, is it naturally bundled? No. Therefore, will it become a composite supply? No. Then it will become two. Will it become two supplies? The answer is yes. The answer is yes. Therefore, two separate rates of tax has to be applied. 5% in respect of goods, 18% in respect of cab services. Okay, lands and maybe 18% or 28. I have not got into that debate. And that supply must be in the ordinary course of business. In Bangalore, we have got restaurants which gives you free pickup and drop. If you book a table for 12 people, there is a free pickup and drop by restaurant. Free pickup and drop. Is that a composite supply? Will the free supply be valued? The answer is yes. The rate will be peak. Therefore, they could land in 12% rate of tax, although the rate for food can only be 5%. So you need to be careful in respect of composite supplies. I am still wondering how the government gave a circular in respect of vehicle servicing, where they said supply of parts is liable to tax at 28%, labor and other services are liable to tax at the rate of 18%. Will the government accept this same position in respect of repair services of renewable energy products? Will they accept it? Because renewable energy products, solar PV modules is liable to tax at the rate of 5%, chapter 82, chapter 84 of the second schedule. Will they agree at the rate of 5% and labor at the rate of 18%? Will the government agree? I want to ask them this question. They will say, no, it is a composite supply, it has goods, it has service, therefore it is 18. How did they give the clarification in respect of car services or scooter service or two-wheeler service? I have no idea at all. Please consider there is enough litigation in respect of these transactions. Similarly, in respect of electrical goods, can you say repair and servicing of fan is liable to tax at the rate of 18%, although a part of a fan, for example, a fabricated part of a fan can only be 5%. Can you still say it is liable to tax at the rate of 18%? My answer would be no. Composite supply means there must be two supplies. Those two supplies must be individually taxable supplies and they must be naturally bundled. In respect of service, supply of part and labor is naturally bundled. Therefore, they will become works contract services and labor is the principal supply will be liable to tax at 18. It cannot be 28 for parts and 18 for goods. It cannot be. Now consider this mixed supply in respect of levy. I will give you one example. Mixed supplies means two or more individual supplies in conjunction with each other by a taxable person for a single price. By a taxable person for a single price, where such supply does not constitute a composite supply. Composite supplies means there must be two individual supplies in conjunction with each other, naturally bundled, one of which is a principal supply. Now consider this case where Vijay Kevalramani goes and hires Oberoi in Mumbai for as a convention hall. I want a convention hall for 3 hours. He will say 750 rupees per person. He will say it includes high tea coffee plus one dinner and 3 hours of room rental with audio, video, all of it. Don't consider Oberoi because rate of tax will be similar, same. I want you to take a smaller hotel which is at the 5% levy where the room rent does not exceed 7,500 per room. In such a situation, what can happen? Food is 5, room rental is 18. Can you say it is mixed supply? Why is, then the question that arises is, two or more individual supplies of goods or services. Yes, there is a hiring of room. In conjunction with each other, he gives you food for a single price. Then you have to determine the peak rate. You pay at the rate of 18%. Now, in this case, I am saying delink both. Delink both. Delink both. You say 300 rupees for food, 200 rupees for room. Make it 500 rupees per person. Then pay tax under composite supply. One will be 5, the other will be 12. A single contract, settled position of law by the Supreme Court. A single contract can be vivisected into 2 agreements. The government is not empowered to club together and tax together. They cannot. Now, Vijay, do I have another 10, 12 minutes?
Yeah,
Yes, sir,
no
yes.
problem.
Yes, sir. Yes, sir.
I have about 10, 12 minutes. Yes. Now, I will take some very, very interesting issues of taxation. Consider 4/2018. Those of you who practice GST law will know 4/2018 is the notification that was issued on 25th of January 2018 for taxability of development rights. When a development right is supplied by a landowner to a developer for the purpose of construction of an immovable property, that notification proposed to levy tax. That notification itself is a levy. It is levy, it is collection, it is everything, but it missed one point. 4/2018 came into the statute book on 25th of January 2018. It said the supply of development rights by a landowner is liable to tax in the hands of the developer. Liable to tax in the hands of the developer. It did not stipulate the rate of tax. It did not stipulate the rate of tax. It did not stipulate the valuation mechanism. Therefore, if somebody has to apply 4/2018, should it be circle rate? Should it be market rate? Should it be the rate of development rights agreed upon by the builder and the landowner? Because, please be careful, development right is one of the rights in a bundle of rights. It is not a transfer of title in land. Title in land will continue to remain with the landowner. It will continue to remain with the landowner. But one of the rights, the right to develop that property, is given to the developer. In such a situation, when the rate fails and when the computation mechanism fails, what will happen to the levy? In my opinion, no levy at all in such a situation because the rate has failed. Now, Vijay can argue with me saying, Venkat, wherever there is no rate, it is service. Therefore, apply the residual rate of 18%. Any service is liable to tax. This service is also 18%. If that were to be the intent of the legislation, there was no need for the notification. There was no need. The notification came about to describe this supply. That means they're describing the supply for the first time. Till such time, land was considered to be an immovable property. It was considered. There is a 2012 notification under service tax law which says that development rights emanate from an immovable property not liable to tax. It is the same central government which has given this circular. Now they are saying development right is a service liable to tax at the rate of 18%. They are not saying that it is immovable property. Now they are saying it is service liable to tax. Under service tax law, they said it is immovable property. Nothing has changed. From times immemorial, same classes of agreements are being entered into between the developer and the landowner. Now to turn around and say it's taxable, in my view, is not possible. There are two decisions there. Suresh Kumar Bansal and B.C. Srinivas Shetty. Suresh Kumar Bansal's case, the Honorable Delhi High Court said, pro rata value of land you have to remove. My difficulty is not removing pro rata value of land. How much value I should remove is the question. All right. Law says pro rata value of land you remove. What rate? In Worli Seaface, it is 1 lakh per square foot. Should I remove 98,000 rupees because 2,000 is construction cost? Will the government agree 98,000 removal? Or if I go to, let us say, for example, Thane, if it is 25,000 rupees per square foot, can I say 22,000 is cost of land and 3,000 is cost of construction? How do we value? How do we remove? When the valuation mechanism fails or computation mechanism fails, there can be no levy. This is the law laid down by the Honorable Supreme Court in B.C. Srinivas Shetty's case. Charge fails when there is effective machinery for valuation is absent. Now go back to the example that I took, the Vijay's case and Girish Ratty's case. The levy will fail in respect of the old washing machine that is given in the absence of valuation provision. The effective levy will fail. Therefore, please be careful. There can be a double tax. What is this double tax? He will levy tax on the new machine purchased, new washing machine purchased by Vijay, as if it was a comparable price with somebody who does not exchange. He will levy tax on that price, and in respect of this, he will use reasonable methods of estimation and levy tax as if it is a second supply. Please be careful. We will have to handle this with tact. Otherwise, you can lose it. 2. That is point number 4. Royalty paid to the government. There are several state governments which levy royalty on, let us say, mining activity, extraction of boulders, extraction of sand from the riverbeds, or extraction of iron ore, extraction of bauxite, iron ore, lignite, coal, call it by whatever name. There is a royalty. The Rajasthan High Court said that the royalty paid by the person who is extracting to the government is a charge. The moment it becomes a charge, it becomes a tax. Does the GST law empower itself to levy a tax on tax? In my view, no, not possible. The Goa bench of the Mumbai High Court held in this mining association's case versus Union of India. It said that royalty is a tax. Royalty is a tax. Therefore, whoever is looking at taxation of royalty, I think we have a good case on hand to fight. There can be no levy on royalty. I am talking of royalty to the government and not royalty for use of brand name. Both stand on a completely different footing. Please be careful. Royalty paid for technology, patent, trademark, copyright, brand, etc., is different from royalty paid to the government. This issue is substantive tax. Is substantive arguments are available. Is shortfall tax. Please go back to 3/2019 in respect of works contract cases, where in the notification 3/2019, the government specified that if your purchases from a person required to register but who is not registered is lower than 80%, then you have to make up that shortfall by way of a shortfall tax. Now, is that a GST levy? Is my first question. Is that a GST levy or is it some other tax? Some other tax. A levy must be on a supply. A levy must be on a supply. The class of dealers, no doubt, has been mentioned by the government as a person who is constructing or a works contractor. Now, to say that, for example, Rahejas in Mumbai has affected 8% of the inward supply from unregistered suppliers and to levy tax. Can you levy Is that GST? To me, is a questionable transaction. Please look at it. I don't have time to elaborate, but otherwise I would have said. Consider this case. In the case of barter or exchange, please look at some of the very, very large companies that are operating in Mumbai. Godrej, for example, Tata Steels, which is there, Larsen Toubro, which is there. They have transactions which are in the nature of barter or exchange. Now, I have taken one example from Karnataka. We have Jindal Steels in Karnataka, where they use the Corex technology for the purpose of manufacture of iron and steel. In the process of this manufacture, there is what is called as this Corex gas, which is generated as a byproduct. This Corex gas is given to cement manufacturing companies to fire their furnace. In exchange, Jindal is getting bags of cement. Now my point is, where is the valuation? How can you value Corex gas given by Jindal to Pena Cements, let us say in Gulbarga? What is its value? If the value fails, levy fails. Now consider this case. For example, if you have Godrej in Vikhroli, it says, take this scrap that is available here, and tells Vijay, please set right my compound wall. Neither the value of the scrap nor the value of the compound wall can be ascertained, because like kind, like quality, at or about the same time would not be available. Therefore, applying BC Srinivas Setty's case, the charge fails when the valuation or computation mechanism fails. So there can be enough number of cases here where you can look at these transactions. My bigger problem is not this. My bigger problem is, how do you account these transactions? Is Godrej accounting for issue of these scrap materials, and are they capitalizing the construction of the compound wall in my example? Or is Jindal accounting for this issue of Corex gas, 5 cubic meters, vis-a-vis getting 100 bags of cement? No, you will find this in notes to accounts. It is not a part of the financial statements at all. In fact, those of you who deal with these transactions relating to gold, please be careful. Old gold vis-a-vis new gold. Old gold purchased, new gold supplied, no difficulty. Old gold in exchange for new gold. Old gold in exchange for new gold. Would the trading account reflect it, or is that a stock adjustment? Please be very careful. Vijay can go and give 5 grams of 99 karat gold, which is a bar, get 5 grams of gold without stones, which can be a finger ring, which can be a ring, and it is a proper exchange. Now, how do you value? We don't know. 99 karat gold at what price, this at what price, making charge, no making charge, wastage, we have no clue. And how are these transactions accounted by these? I think it's an accountant's headache. We will have to be careful. Now, how do we account for chit fund transactions in respect of these gold schemes? You go on paying 5,000 rupees per month, go on paying. In the 10th month, that fellow will give you 5 grams of gold plus 5,000 rupees cash. He will give you both. 5 grams gold, 5,000 rupees cash. He will give you both. Now, how do you account this? Are these transactions, one in monetary consideration, cash for cash, and the other a supply of gold by the entity to the individual? I am unable to understand how this transaction works. How does one arrive at the supply value when government has taken over hotels? I have written Bangalore. Now look at Mumbai. In Mumbai, government has taken over hotels. Government has taken over Kalyan Mantaps. Government has taken over restaurants. What is the value? What is the supply? Is it like kind, like quality? At or about the same time, government may pay me money, government may not pay me money. Is there a supply transaction in this case at all? Is there a supply? In Bangalore, for example, almost 60 hotels have been taken up by the government. Not a person has got a single rupee from there. They have already occupied. They have converted rooms to beds. I have no contract, I have no value, nothing. How is valuation going to take place in these COVID times? Now, those of you who are chartered accountants, for you, this is some food for thought. Those of you who also audit companies, please look at this accounting policy. Accounting policy says revenue is recognized on appropriation, manufacture and appropriation. For example, Thermax in Mumbai manufactures boilers for Triveni Engineering Works in Kolkata. And it says boiler is manufactured and ready. It has appropriated it to the contract, but the time for supply will come later. Boiler is manufactured, ancillary material is not yet ready. Therefore, a note is given in the financial statement which says revenue is recognized on appropriation. So turnover goes up in the financial statements, but no invoice is raised, no advance is received. Similarly, in the case of lifts, manufacture is over for the contract. 66 floor, 12 lift, shingler, all are over. Contract appropriated, site not ready, date not ready. They are manufactured in advance. When is the tax payable? When is the invoice to be raised? No e-way bill is generated, no payment in advance. Whether there can be a levy, the provisions of 31B will not be operational here because he has only appropriated, but he has not made available the lift. Please be careful. One is appropriation to the contract, making available to the recipient is another part. Making available means telling him it's ready, take it and get out, X factory. Here he's kept it ready, but he has not yet lifted it. Similarly, in case of finished goods, where it is finished, appropriated, but not done. Please be careful. Levy can be 2 years. Levy can be in the earlier year. Taxability of price protection scheme. In Mumbai, what Sony is doing, it is telling SLR 174. This is a model of a camera. It says, it tells its authorized distributors to sell it at 1,75,000, including the tripod, including its stand. 1,75,000, because Sony SLR 240 has already come into the market. It has come into the market. It says sell at 1,75,000. 65,000 I will give you as price protection. Now, is this discount? Is this incentive? Is this liable to tax at the rate applicable to the camera, which is 28%, or is it service? Please consider it. It is definitely not discount, because 1,75,000 is the customer price which the authorized distributor will be selling. 65,000 he gets it from Sony Corporation. If you treat it as incentive, it's liable to tax at 18%. If you say it is price protection, liable to tax at 28%, rate applicable to the commodity. Please be very careful of taxing these transactions. In my view, price protection is liable to tax at the rate applicable to the commodity. Levy becomes very, very important here. Levy is the event, levy is the goods. You have to link both. Therefore, it will be liable to tax here. Mumbai is well known for its cashback schemes. You go to a Reliance retail outlet there, buy for 5,000, he will say cashback of 200 rupees. It is not discount. You have to go next time to the same Reliance retail outlet, give your number, whatever is that ID number you have to give. He will say, sir, if you buy for 2,000 only, you can encash that 200. Now, is that discount, or is that incentive, or is that business promotion? Is it other income? What is it? Should it be liable to tax? Should it not be liable to tax? Or is it virtual currency? Because in the subsequent supply, Vijay and Girish will only be paying 1,800. They won't pay 2,000. Can you treat that as discount? My view is no. It is not discount. It is cash back. Therefore, cash back cannot be 15 subsection 3. Be liable to tax at the rate applicable to the product. Liable to tax at the rate applicable to the product. Consider annual maintenance contracts. This is the last slide, Vijay. You can stop me whenever you want. I have only 2 or 3 issues. Please stop me at whatever time. If you are running out of time.
We have no time issue. Please continue.
Sir, you can continue, sir.
I can continue. Okay.
Yes.
Now consider annual maintenance contract services or insurance services. Girish Rati has entered into an annual maintenance contract for maintenance of computers and computer systems in his office on an annual basis. Consider this case. His AMC begins in February 2020. Girish, February 2020, your AMC begins with, let us say, some distributor, Devaraj Computers. Your AMC begins. Now it runs for 1 year. You pay him the money in advance. He gives you an invoice. Can you claim an input tax credit in terms of the levy? The answer is no. I won't allow you to claim. You cannot claim input tax credit because you have not fulfilled the conditions under section 16. Section 16 says 4 conditions have to be fulfilled for the purpose of availment of input tax credit. That means it says you must be in possession of an original invoice. Girish Rati has original invoice. You must have paid the tax. Yes, vendor has paid the tax. He must have uploaded in GSTR1. Yes, he has uploaded in GSTR1 and filed his return. Yes, he is filed. The 4th condition is a receipt of service or supply of service. In Girish Rati's case, this service is supplied over a period of 12 months. Therefore, can you claim 1/12th in February, 1/12th in March? Then what happens to balance months? If you claim 1/12th in March, I will ask you for invoice. You don't have invoice. You will say my invoice is dated February. All right, I will give you. But for an invoice for 1920, the last date to claim input tax credit is September of that year. Then what will happen to October, November, December, January? Please pay attention. Please pay attention. My view is you will not be entitled to input tax credit. Chartered accountants here can argue, can advance any number of arguments to say the day I enter into contract, service is deemed to be supplied. No, it is not possible. Consider the Kerala floods case or the Latur earthquake case, where in respect of AMCs, people failed to supply services. Therefore, input tax credit was not available. That is the reason why they say input tax credit will be available. Now consider this COVID month where your factory is closed. Is it fair to say 1/12th of input tax service I will disallow? Because no AMC, no service is rendered, and service cannot be rendered for the month of April in the month of May. It cannot be. Therefore, when we are doing an audit, chartered accountants, please remember, what would you want to do? Whether you would want to allow input tax credit for the month of April or don't want to allow input tax credit for a month of April. Please build up your arguments. I am saying input tax credit not available because service not rendered by the supplier of service. He has not rendered. Therefore, input tax is not available. Consider facility management services. Girish, consider facility management services.
Yes, sir.
Where you enter into annual maintenance contracts to say 3 times in a week you have to come and wipe the facade of my factory building or corporate office building. You have not rendered that service. You have not rendered. Therefore, you are not entitled to input tax credit. You may turn around and tell me I will issue a credit note to the supplier. Just imagine if you have entered into a contract in February 2019, credit note time is also expired. That is also expired. Within 6 months you have to issue. All are losses. Please be careful. Same problem with insurance service. On forward charge, I have one issue. I always keep taking this example. Can anybody tell me the tax rate on bearing, B-E-A-R-I-N-G? Bearing is a component which is used in automobiles. Bearing is a component used in mixie. Bearing is a component used in fan. Bearing is a component used in bicycle. Now the levy says tax supply event classification at notified rate. Can anybody give me what is the HSN classification for bearing? If you say bicycle, it should be exempt. If you say Usha Electric or Havells, because they manufacture fan, it must be 18. If you say it is supplied to Tata Motors, are you willing to charge 28%? I have no answer. Government has no answer. They just fail to answer these questions. Consider the last 2 points. KORA. Quora is a website. Quora is a website where your questions are answered, or somebody is answering somebody else's question. Somebody is answering somebody else's question. Somebody is answering somebody else's question. Where is this fellow making money is my question. To Quora, if you want to be a part of that, you will have to subscribe. Quora says, if you are an individual not carrying on business, you log in through this ID. If you are a business registered in India, duly registered, log in through some other ID. My question is, are they paying tax on reverse charge, or are they paying tax on forward charge? Is my question. And how is the government monitoring this transaction? Where is the revenue going? Is the revenue at all getting captured in India, or is it getting captured outside India? Because your payment can be through INR. If you use your SWIFT account, the recipient can always get it converted to dollars. There is no difficulty at all. Now, how are you going to tax or look at these entities is something which is very, very difficult. Consider the KPO and BPO units, which are located in Mumbai, Thane, wherever, Gujarat, where I'm sure members have logged in across India. Consider all these BPO entities. Now, most of these BPO entities access software of their parent company. The parent company can be in London, it can be in Singapore, it can be in Hong Kong, it can be in Beijing, it can be in San Francisco, it can be anywhere. The software is located in that state. You access that software, log in, then service your customers. How do you service? You say, good afternoon, Tata Sky, Girish Rati, can I help you? Can you tell me your ID? Now you don't even know whether this software is sitting in Mumbai or software is sitting in San Francisco. If this software is sitting in San Francisco, can it be treated as import of service? The answer is yes. The answer is yes. You have to pay tax as if it is an import of service. How do you determine its value? The value that you charge your customer for the purpose of this service is the value that I will determine for the purpose of software. Please pay tax at the rate of 18% as import of services, and you will get stuck. Consider this case. I can challenge chartered accountants who are on this forum. When you are doing an audit, your customers will keep buying software. They will buy Microsoft software, they will buy Dell software, they will buy SAP software, they will buy Google software, they will buy some other software. And this software comes by way of import. Have you ever checked whether this on this import of software, whether they paid tax as import of services, whether they paid? If they paid tax at the rate of 18%, I have no difficulty. If they have not paid, I'm afraid we are stuck. I'm afraid we are stuck. We would not have any position to defend later. Thank you, tax friends. Thank you, Vijay. Thank you, Girish. Thank you, Bharat. I don't know if you are there. Jamna madam, I definitely saw my other friends across India for having given me this opportunity to speak. I have shot beyond my time. I think I've overshot by about 30 minutes.
Thank you, sir. Thank you, sir. We will take some queries. Queries are on chat. If you want me to read, I will read you.
Please read the queries.
The one query is from Sri Brij Gopal Das.
Yeah.
The query is whether material supplied or food supplied to needy person under this COVID-19 situation period, lockdown period, by registered or unregistered person will be considered as taxable supply. Supply made under COVID-19 situation.
Yes.
Well, whether it will be tax will be leviable or not.
Let me come to it. Now, we have two methods of looking at these transactions. The first one is whether you are a person. Girish, I am not able to see the screen. Girish, how is it?
What? Yes, sir.
Your screen sharing is paused. 1 second.
But we can see you, sir. We can see you.
You can see me, right?
Yeah, you are visible.
Yeah, I am visible. Fine. Consider this case. If you are a hotelier engaged in this supply, if you are a hotelier engaged in this supply, then I would subject you to tax as if it is an outward supply, because it is cash or kind. Now, what is consideration? Consideration under 2 subsection 31 is made or agreed to be made. You may make or you may not make. It doesn't matter at all. Now, whether in these cases there is a consideration that is flowing or not flowing is what we will have to decide. Right? Now, in my view, there are 2 classes of levy that the government will come up with. I will tax you under Schedule 2 as disposal. I will tax you as Schedule 2 as a disposal. Now, when I tax you under Schedule 2 as a disposal, automatically I will value the outward supply and levy tax. The other way of doing it is, because there is no supply, any input tax credit on inward supply will be a subject matter of a restriction. Definitely there will be an input restriction. That much there is no doubt. Now consider a second situation where you are not a hotelier, you are an individual who is supplying this, then you are not a person carrying on trade, commerce, business adventure, etc., not liable to tax at all. However, if you are, let us say, a factory, if you are a factory supplying food to your own employees or to somebody else, then definitely there is no input tax credit. There will be no valuation for outward supply. Next.
One more query from S. Parthasarthi.
Yes, sir.
Yeah. In deduction by PWD department in RA bills of works contract as a royalty only because of proof of the payment of royalty at original source of procurement is made available. What is the query?
No, the query is point is whether tax would be payable on royalty. I hope I'm.
Yeah.
That would be his query. As I said earlier.
Parthasarthi, sir.
Yes, Mr. Parthasarthi, sir. As I said earlier, I am taking a position that royalty is a tax. Royalty is a tax. Royalty is a levy. What is this levy? The royalty that they charge is a percentage of the minor mineral extracted. It's only a percentage. It is not the value that they are asking you for. They are not asking you for the value of the product. A percentage of the product extracted is what they are asking you as tax. Therefore, royalty is a tax and there can be no GST on tax. Now consider the second case. Now, Parthasarthi sir, if you are there, you can actually run into a bigger problem. Now, you can run. Why? You are not. Name is there. Consider the second case. Of the lease by these government organizations, the lease by the government, they lease out a particular area. When they lease out a particular area, they take the fee or license fee, what they call. Is that license fee liable to tax? My answer would be yes. My answer would be yes. Because there is a supply of service by the government liable to tax on reverse charge basis. But royalty is a tax which is collected by the government, not liable to tax. In fact, you have 2 or 3 other issues. You have DMF, district, whatever, DMF and NMET, National Mineral whatever. If both of these are taxes, I am not paying tax. I am willing to fight it. Those of you in Mumbai will know the matter is before Supreme Court. Those of you in Rajasthan will know that the matter is before the Supreme Court. Therefore, I am not paying tax. Royalty is a levy, not liable to tax. Next.
One more query from Vijay itself, Vijay Ramani.
Vijay, आपको डाउट ही नहीं आना है विजय? I see Mr. Jammu.
मेरा नहीं है, मेरे पास फॉरवर्ड आया, वो फॉरवर्ड किया है. No, there is no.
अच्छा, okay. What is that, Vijay? Can you speak?
Thank you, Jammu madam. Thank you, Santosh. I see your names appearing there.
Query is that what would be taxability on forfeiture amount taken prior to GST period?
Taxability on forfeiture amount prior to GST period. Yeah, okay. See, this is my problem. I am saying if you call it forfeiture, he will say act of forbearance, etc., and subject you to levy under second schedule para 5. You will levy. Why don't you revise the contract price? You revise the contract price. The contract price should be revised in such a way, saying if you don't deliver it before such a date, the price itself reduces. The moment you say forfeiture, fine, penalty, liquidated damage, you will keep fighting your case. You are not going to stay there at all. Therefore, I am saying amend your contracts in such a way that don't say forfeiture, don't say this, don't say that. You say the contract price will be revised if you don't perform your obligation. Matter over. There can be no levy at all. There can be no levy. Nitin sir, thank you very much, Nitin Gautam. So there can be no levy. However, to answer this question, if you call it forfeiture, it will be liable to tax. Next.
One more last query now from Bharat Sachdev. Sir, consider reward. Bharat, Bharat se query hai. Bharat, you can speak. Bharat,
yeah, I can. Sir,
Bharat.
sir, good afternoon, sir.
Good afternoon, Bharat Bhaiya. Bharat Bhaiya, you should be teaching me.
There was a query which I had in mind when you consider this levy and issues, that there are reward points which we receive in credit cards and other cards.
Yes.
And the same is used to, suppose, buy a computer or a laptop. We got a reward point, say a lakh reward points, and I buy a laptop. Can I avail the ITC on the laptop purchase through reward points? And whether I would be liable to pay RCM on the reward points also?
Okay. Now, there are three classes of business that happens in case of reward points. Now, let me start by telling you, if you use your State Bank of India Visa card, there will be 100 reward points that will be accumulated to your account. Now, what State Bank of India does, he has hired one more man, somebody else, ABC Corporate Private Limited. Now, he says, as at 31/3/2020, I have 54 crores of reward points which are accumulated. These are the products you can supply, or this is the money value that I will give you. You service all these fellows. You service all these fellows. Now, the moment you use your reward points for the purpose of purchase of your laptop, 3 transactions happen, Bharat. Please be careful. 3 transactions. One is you are using 100 reward points. Therefore, your supply price of laptop comes down by 100 rupees. But they will be subject to tax on full value. Full value. It will not be on 9,900. It will be on full 10,000 rupees. The second, there is a supply of reward points by State Bank of India to the service provider. That supply, if you apply Yasha overseas case, Honorable Supreme Court there, he said, is a supply of service liable to tax. State Bank will be a subject matter of supply. Third, when you redeem, then the entity that is in between will be a subject matter of levy. All 3, in my view, are liable to tax.
Okay.
Vijay?
Okay. Thank you.
Hello,
Hitesh,
Vijay.
good afternoon. Thank you. Bharat Bhaiya,
Yes,
if
sir.
you are doing a Bharat Bhaiya, good afternoon.
Good afternoon, sir.
Company where you are redeeming these points, you tell those fellows to pay tax at the peak rate of 18%, not the rate applicable to the product.
Okay, it will be taken as service.
Of course, yes, it is service, not the rate applicable to. Jabna madam, good afternoon.
Girish, there are 2 more queries.
Yeah.
One is from Santosh Gupta and one is from Ashutosh Trivedi.
Query,
Santoshi, Nagpur.
yes, sir. The query from Santosh Gupta is that
Yes.
his client Haldiram is having stock of sweets and not allowed to sell.
Correct.
Due to the lockdown. Now
Correct.
he is distributing these sweets to his employee. Whether any tax will be applicable, attracted, or ITs will be allowed?
Santosh, matter is simple. If you say it is sample, you have to reverse under 17.5. If you say it is loss, you have to reverse under 17.5. You say it is business promotion. No, it is allowed. It is in the course or furtherance of business. Why do you say free sample? Say it is business promotion. Pura customer ko de diya. Bas ho gaya. Don't say it is free sample. How you pass an entry makes the difference.
Okay. There is one from Nitin
Sir,
Shah.
sir, 1 minute. Sir, 1 minute. Sir, Girish, 1 minute. Sir, taking Santosh's query further, the moment he says I give it to my employees, will it not attract that if it is more than 50,000 rupees service?
Why do you say you have given it to employee? Say given it to customer as if he's coming and seeing you there. And he is not taking any voucher from his employee.
Absolutely.
One query from Nitin Shah. Can
Gopalji, good afternoon.
Venkat, can ITC be claimed on CSR activity?
Of course, yes. Who's asking that question?
Nitin Shah.
Nitin Shah.
Nitin Shah. Yes, Nitinji. you are talking of corporate social responsibility under Section 5 of the Companies Act 2013. Am I right? That 2% on whatever average profits for 3 years. Am I right?
Yes.
Now, yes. It is in the course or furtherance of business. Now, why am I saying it is in the course or furtherance of business? If you don't carry on the CSR activity, then your continuing business will be jeopardized under some other law by imposition of penalty, fee or fine. Penalty, fee or fine. But in order to permit you to continue this business, the law tells you that you will have to spend 2% of your net profit. It is in the course or furtherance of business. Credit is available in my view. I am claiming credit in respect of most of my companies. Government will say 100 things, but we will win it. Siddesh, good afternoon. Nice to see you.
Okay. Now
one query from Arvind Jain. Arvind Jain is.
Yes, Arvind Jain.
Arvind, for old gold exchange against new ornaments.
Sorry. Girish, thoda slowly, huh?
For old gold exchange, old gold is exchange against new ornaments. What will be taxable value? Whether it will be the value of new ornaments or net value of the old golds.
Where is Arvind? Can I see him?
Arvind
Jain. AMJ. You can see AMJ.
Yeah, AMJ. Arvind Ji, what answer you want from me? I can give you 3 answers. You want the best answer or you want the worst answer?
He's the joint secretary of TPA Thane.
Joint secretary of TPA Thane. Then I would start with the worst answer and then come to the best answer. Now, consider this case. Old gold for new gold. Forget your stone, forget wastage, all that for one moment. Say 100 grams of old gold for 100 grams of new gold. Now, if I treat this old gold as antique jewelry, then I will take you to reasonable methods of estimation under Rule 31. Correct? Reasonable methods. Then I will not go by RBI rate or State Bank of India rate or rate on 31st of March. I won't apply that rate. I will apply the rate reasonable, because if your great grandmother's, let's say, earring is available, uska value hai na, it is not by way of weight, it is by design. Therefore, C. Krishna Chetty and company in Bangalore may give 1 lakh for 5 grams. He may give. I will apply that rate. That is option 1. Right? Option 2. I will apply the new gold rate for old gold. This is option 2. Option 3, I will apply the peak rate, because value of gold keeps fluctuating within intraday or interday. Suppose you are given old gold yesterday, new gold you are giving him tomorrow. I will apply the highest rate. But between you and me, it is the rate applicable to the gold. But be careful. Are you reflecting this, Arvind, in your trading account? Because it is proper exchange. Are you showing inward supply and outward supply, both? Or are you adjusting in stock?
Yeah, I'm showing both the purchase also, sales also.
Yeah. But Bharat Sachdev just told me he's adjusting in stock. Told me.
He's just making the bill for labor.
Yes, sir. Girish ji.
Yeah. Last query from
Atam ji, good afternoon.
And the last query from Ashutosh Trivedi.
Yes.
In case of exports of service, if payment is received from foreign customer in Indian currency, still it is considered as export. All other conditions are fulfilled. Now, the refund
is not fulfilled. It is convertible foreign exchange.
It is a must.
6. You have to get it in convertible foreign exchange. Only then it will be export of service and you can claim exemption. If you receive it in INR, you will not get exemption.
Okay, so this is the end of the queries.
Good afternoon, sir.
Good afternoon. Who's speaking? Atam bhai.
Atam Chekchandani from Bombay.
Atam ji, thoda आगे आइए ना, मुंह तो देखता हूँ.
अरे सर गाड़ी पड़ गई है, मुंह क्या दिखाऊं?
साधु बन गए बाबा जी.
सर आपने पूरे लेक्चर में मेरा नाम नहीं लिया आज.
आप दिखे ही नहीं ना उसको.
हाँ, अभी दिखा.
अभी मुंह नीचे करो, फोटो निकालना है, मुंह नीचे करो, फोटो निकालना है।
Camera,
I see
camera.
all smiling faces on my screen. That means all of them have made enough money fit for retirement.
Not me, sir, not me.
Who is not you? Atamja,
We are enjoying pre-retirement.
My party
I'll
is still
take care of your
my,
life.
my party is still pending with you, sir.
आ जाइए sir, Bangalore.
Girish, let us complete the formalities, then we'll continue this.
Acha, okay, sir. Now I request President of Bhiwandi Tax Practice Association, Rakesh Agarwal, CA Rakesh Agarwal, to propose a vote of thanks.
Sridhar Patsati, thank you.
Rakesh Agarwal.
Yes, sir. Can you hear me, sir?
Yes, sir.
Yes, sir.
First of all, I thankful to Ramani, sir, on behalf of Bhiwandi Tax Practitioners Association for conducting this jointly webinar with Thane Practitioners Association and giving me this opportunity to offer a vote of thanks to S Venkataramani, sir. Sir, at the outset, I thankful to you for your valuable time, and it was a really very knowledgeable session where you had touched and enlightened us on various issues on levy and collection under GST, sir. Sir, this is the third time I am listening to you, sir. And every time I learn new thing, even though it is the same topic, because couple of days back also you were a speaker in Star. And sir, I hope that all the participants will agree that it was a very value addition and it will help us in our day-to-day practice. Again, I thankful on behalf of all the participants to S Venkataramani, sir, for this value addition seminar, and we expect the same cooperation in future from you, sir. Thank you very much, sir.
Thank you.
Thank you, sir. Thank you.
Thank you, Rakesh.
Thank you,
Rakesh.
sir. Thank you, Vijay, sir.
Thank you.
Thank you,
Thank
Girish,
you.
sir. Thank you, Bharat, sir.
Venkat sir.
Few announcements. Girish, please. Friends, today evening we have a lecture on amendments related to charitable trust by Rohan Dedia at 5 o'clock. The link has already been sent. It is point number 2 on the for tax friend members. Tomorrow we have a AGM at 5 o'clock in the evening. So all the tax friends members are requested to be online. The link has already been sent. On the 14th, we have a lecture jointly with tax friend TPA and MCH at Thane on self-redevelopment of housing societies by Sri K.K. Ramani Advocate. All are requested to join, and we are also planning a lecture on assessments under GST by Advocate Varanasi on Wednesday. Details will be sent. Just friends, just one more small.
Thank you, Vijay. Thank you, Vijay.
Just one more small clarification, Girish. In the beginning, most of the members had to wait outside. The problem, friends, is we got 4 host associations, so we have to first ensure that the members of the host associations are inside, and then the persons who have confirmed earlier, they are given the entry, and then we give it to the rest once we have the space. All those who are sitting outside for some time, I apologize to them, but I think they should understand, because if we have got 4 associations and the seats are limited, so first we have to give a priority to our association members. Yeah, Girish, now you can.
Thank you, Vijay.
I'll take 1 minute, Girish.
Yes,
OPG,
sir. Yes,
namaste.
sir.
Jamuna ji, OPG, namaste.
Namaste, namaste.
I cannot forget Banaras in my lifetime.
You have to come again here, sir.
I
It
will
will
come. I
again be
will come.
memorable.